has barred Jane Street Group from accessing the country's securities market, citing an order that the regulator posted on its website. Now, we will discuss this in depth with the experts on the show, but before that, we have Ankur, who's here to take us through the timeline of the whole case.
Yes, SEBI has barred 4 Jane Street entities from accessing the market, and why it has done? Because SEBI says Jane Street used the strategies to influence the index levels as well as making profit, which seems manipulative. Now, probe has been triggered after US lawsuit actually revealed the alleged misuse by the firm of Indian Strategy, and SEBI has identified the exact amount also. The exact amount stands at 4,843 crore of total illegal gains during this activity, and this has happened in 21 days. Apart from that, if you talk about overall profit, Jane Street has made 44,358 crore profit in index options, and this lies between January 2023 to March 2025. Now, one of the pages which mentions about Jan 17 incident, and that is one of the examples which can be given actually what happened. So what happened on Jan 17? The firm actually bought 4,370 crore of Bank Nifty stocks and futures in the morning. Later, simultaneously, there was also a position which was built of 32,115 crore short position. And what happened in the afternoon? Sold 5,372 crore worth of Bank Nifty stocks and futures. Now that dragged the index lower, and later on the firm was able to manage 735 crore of profit in that day itself, and against a 61 crore of intraday loss in cash future. So made a profit in options and loss in 61 crore due to this strategy, and that happened in cash and futures. Now, this is not one of the instances which happened only on Jan 17. SEBI has identified several of these kind of instances and the strategies which was applied by the company for market manipulation, which is flouting of norms of SEBI. Now, as far as Jan 17 is concerned, there was also hike in terms of turnover. Cash market turnover in 12 Nifty stock, Bank Nifty stocks was 29,225 crore, and similarly 12 Bank Nifty stocks turnover was 43,589 crore. But overall, if you just sum it up, the point which SEBI is trying to make is that Bank Nifty options versus total market was around 98 times. Yes, I repeat, it was 98 times on Jan 17, and that is the reason why SEBI actually got into action. If you look at the whole timeline, why it has happened, April 2024, there was an article in media where US media report was there that this firm is actually applying a strategy to manipulate the market, and after that the investigation started. Later on, SEBI asked NSE to examine these kind of trades on the given dates which were there, and August 20, SEBI interacted with the Jane Street Group. They asked what are these strategies, and after that Jane Street had submitted a written submission as well on the questions which were asked by SEBI. Later on November 13, 2024, NSE submitted detailed report on Jane Street trades which they observed as it was asked by the regulator earlier, and February 4, 2025, SEBI team actually flagged prima facie violation of its norms, and this was the first time when SEBI actually said that there is a flouting of norms which is happening, and hence the company needs to take an action. And February 6 and 21, Jane Street once again responded to that caution kind of a letter, and May 15, SEBI notes that Jane Street continues high risk expiry trade, and this happened despite the warnings. And finally in July now, SEBI has passed an interim order whereby a chance will be given for submission to the other party as well, but for now they cannot enter into market. Those 4 entities are banned.